Hello friends, welcome back to our video lecture series. In today's video, we'll see what a cash book is. We'll try finding out the basics of a cash book, the meaning of a cash book, why is it required to be prepared, how a cash book is to be prepared, what are the various types of cash books, and at the end of this lecture, we'll see with a way of an example as to how to prepare a cash book or how the entries are shown or recorded in the cash book, right? So let's start. Talking about the basics of a cash book or the meaning of cash book, we need to understand that it is a book or it's a place where all the cash and bank related transactions are recorded. Which means if we are talking about the cash book, it means we are talking about an account which is related only and only to cash or the bank. In some cases, we'll also see that discount entries are also recorded here. As we proceed with this lecture, we'll see how these three things are shown or they form a part of the cash book. The cash book is also called as a subsidiary book and a principal book. Now we have been talking about these types of books in our earlier lectures also. It's called a subsidiary book because based upon this the entries or the ledger accounts are prepared. Also it's called a principal book because it shows the complete picture of cash and bank related transactions and the balances from here are taken to the balance sheet. You need to remember that any book based upon which we need to prepare the ledger entries or ledger accounts are prepared, those books are called as subsidiary books. And any book based upon which the final accounts are prepared, these are called as the principal book of accounts. So in case of the cash book, we call it as both as a subsidiary as well as a principal book. Why? Because based upon the cash book, you pass the ledger entries and based upon this, the total of the cash book is taken to the balance sheet because cash or bank account is an asset for us. Unless and until it's an overdraft account wherein you call it as a liability. So the balance of this is taken to the next year through the balance sheet, so it is also called as a principal book. Clear? Now let us see what are the various types of cash books. The first type of cash book is the single column cash book, which is the plain the simplest way of cash book wherein you record only the transactions related to cash. Simple. Cash received, you record that. How to prepare that? It's a simple account. On the debit side, on the credit side, you have two sides. On the debit side, you record the receipts, cash receipts. On the credit side, you record the cash payments. That's all you need to understand. If you understand this logic, the preparation of cash book would be very easy for you. So the first type of a cash book would be a single column cash book wherein you have a single column which would be reflecting the cash related transactions. Then you have a two column cash book which is a combination of cash with some other, say for example cash plus bank account or cash plus discount account. If you look at this, you would appreciate that the bank transactions are also of the same nature of a cash transaction, or the discount received or discount paid, especially at the time of cash discount. If you remember the lecture related to cash discount, you understood that the cash discount is a discount which we receive or pay when cash is received or cash is paid, right? Then you have a three column cash book wherein you have three columns, one dedicated to cash, the other one dedicated to bank, and the third one dedicated to the discount account. In other words, if you have these three varieties to be recorded at the same place, then that type of cash book would be called as a 3-column cash book. And you need to remember one thing: if you have any transaction wherein both the cash and bank are affected simultaneously, you have to pass a contra entry. So contra entry is an entry wherein the debit and credit are to be shown simultaneously in the cash book on the same day. Why? Say for example, the examples of that would be cash deposited into bank, cash deposited into bank, or cash withdrawn from bank. Now what happens if you deposit cash into bank? The entry would be bank account debit to cash. So one account is being debited, the other account is being credited, and both these accounts form a part of this cash book. So the cash book has to be debited under the bank column, it has to be credited under the cash column simultaneously. So this type of entry would be called as a contra entry. We'll see how to pass a contra entry in the example today, right? So the types of cash book would be single column cash book, wherein you record only transactions related to cash. Then you have 2-column cash book, wherein you have 1 column in addition to the cash transactions. That could be either the discount account or the bank account. So the combination can be cash plus bank or cash plus discount, right? So these would be 2 columns. In 3 columns, you have all the 3 accounts, namely the cash account, bank account, and discount account. So that would be 3-column cash book. Now let's see by way of an example as to how to prepare these 3 types of cash books. So if I talk about an example wherein we are supposed to prepare a single column cash book using the details like starting the business with cash 10,000, paying rent of 800, cash sales 3,000, office supplies 500, receipt from debtors 2,500. All you need to remember in a cash book is on the debit side, you record the receipts. If you receive cash, record that on the debit side. If you pay cash, you record that on the credit side. That's it. You need not go into any other complications because the preparation of cash book is the simplest of all the ledger accounts that we have seen. The only thing that you need to remember is cash is an asset for you. The rules for asset are: whenever the assets increase, you debit that. Whenever the assets decrease, you credit that. Those are the rules for debit and credit. If you are still confused, would request you to go to the video related to the rules of debit and credit, which we have done earlier, right? So whatever the cash is received in the business, say for example, business started with 10,000, which means the business has received 10,000 in cash. Record it on the debit side. Paid rent, record it on the credit side. Cash sales, you have received 3,000 on the debit side. Purchase of office supplies on the credit side, payment side. Receipt from debtors 2,500 on the receipt side. Very simple. So let's see how to prepare this cash book. What happens, since date is not given to us, we would assume that all the transactions have happened on the same day. The first thing is we need to receive cash on account of starting the business. What we say on the receipt side, this is the debit side or the receipt side. This is the credit side or the payment side, right? Received cash, I would say to capital account. How much is it? 10,000. The next one is rent paid on the payment side by rent 800. Cash sales to sales 3,000. Purchase of office supplies by office supplies 500. Receipt from debtors to debtors 2,500. So I have received cash of 15,500 and paid cash of 1,300. Whatever the balance is, I would be recording the balance here. This is nothing but the balancing figure. This is how I prepare a cash book, which would be a single column cash book or the cash account. Clear? So the next type of cash book would be a two column cash book, as we have already seen that the two column means you have one column named cash, the other named discount, or it could be cash plus bank. In this given example, we are talking about only cash transactions which discount column, right? If you look at the illustration, it says Shubham and company purchased furniture for 1 lakh on which they get a discount of 10%. They also sell some goods to Sohan for 1,50,000. It is known that Mr. Sohan makes the full payment after availing a discount of 10%. Prepare it to column cash book. So my columns would be a discount column and a cash column on both the sides. All the other things remaining the same. So what I would say purchased furniture worth 1 lakh. Purchased means you need to pay that. Paying means you record that on the credit side. You are supposed to pay 1 lakh but you got a discount of 10%. So 10% of 1 lakh is 10,000. So you ultimately end up paying 90,000. If you look at the cash column, it says payment of 90,000. Discount would be shown here with the payment itself. And if you also look into the logic of this, discount received is an income for you. All the incomes are recorded on the credit side. Discount allowed is an expense for you. All the expenses are recorded on the debit side. Right? So since we have received this discount, we are recording it on the credit side of the cash book. Clear? The other transaction is related to 1,50,000, which we have sold goods to Sohan, and Sohan has paid of with a discount of 10%. So 10% of 1,50,000 comes to 15,000. In other words, we would say we have received 1,35,000. If you look at the receipts column, we have received 1,35,000. Again, discount allowed is a loss for you. If it's a loss, it's recorded on the debit side, which is the left side. So we would say to sales, discount would be 15,000, amount received is 1,35,000. Clear? It says prepare a two column cash book if the opening cash balance is 50,000. Opening cash balance recorded on the debit side. Asset always has a debit balance. So we record that as the opening balance. This is the opening balance for us. This would be the closing balance. This is the closing balance for us. Right? So my closing balance would be 1,85,000 minus 90,000, which is 95,000 is my closing balance. Clear? This is how we prepare the two column cash book. Now let's see an example wherein we talk about the three column cash book, right? In three column cash book, I've already told you that we need to talk about the contra entry. Contra entry happens when you have both the cash account and the bank account being affected simultaneously. First, let's find out which type of transactions involve both the cash as well as bank. Started a business on 4th April with a cash balance of 10,000. This would be reflected here. Opening balance on the debit side 10,000. Enters the following transactions for which you are supposed to prepare three column cash book. 15/4 cash deposited in the bank. Here it is. Cash deposited into bank 5,000. Which means both the accounts, namely cash as well as bank, has to be affected simultaneously. Cash has been deposited, which means cash has gone out. Whenever the cash goes out, you record that on the payment side. Here it is. Under the cash column, you show 5,000 rupees. Since it is deposited into our own account, which is an asset again. My bank balance goes up. Whenever an asset increases, it is to be debited. See the bank account here, debited with 5,000 rupees. Date is the same, 15th of April, sorry, 15th of April here. And when both the transactions are there, we need to tell that transaction as a contra entry. So in the ledger folio column, we would mention the word letter C, which stands for contra entry, which means it automatically offsets both the sides. But these sides are different. On one hand, you credit the cash account, but you debit the bank account. Hope this is clear. On 25th April, received check from Saharan 2000 against the sale bill of 001. Received check, record that under the bank column 2000 rupees. On 26th 4, issued a check. Issue means you have paid that, it goes down, record that on the credit side. On 27th April, cash received 6000, discount allowed 500. Received, when you receive, record that on the debit side. Here it is. Sold goods for 6000, allowed discount 500. Discount here, whenever you receive the money and you allow discount, discount is an expense for you. If it's an expense, you record that on the debit side. Issued a check to Raman against purchase of 10,000 after deducting a cash discount of 1,000. Discount of 1,000, payment of 9,000. Here it is. On 28th 4, received check from Aman for sales bill 7,000. Received check from Aman 7,000. If it is a check, you record that in the bank column. It's a cash received, record that in the cash column. On 30th April, paid salary to Mohan in cash 1,500. In cash 1,500. Purchase stationery 2,000 in cash. Purchase 2,000 in cash. Then whatever the balance is, this would be called as your closing balance. This is nothing but the balancing figure. How do we do that? This account discount is transferred to the income statement. We have discussed this in one of our earlier lectures. Discount account is not carried forward to the next year. It has to be closed down during this year only. It would be transferred to income expenditure account. So there is no balance which is being carried forward in the next year. But if you look at the others like cash and bank, these needs to be carried forward to the next year also. So in cash, if you see, my balance, my receipts is 16,000. Whereas my payments is 5,000, and for salary I have paid 1,500, which is 6,500, and 2,000 is paid for stationery. So 8,500 is paid out of 16,000. So my balance is 7,500 here. This is the balance, closing balance, which is carried forward to the next year. Similarly, if I look at my bank account, I have received 14,000 in my bank account and I have paid 4 plus 9, 13,000 from my bank account. So I am left with 1,000 rupees in my bank account. This 1,000 of bank and 7,000 of cash would be reflected in the balance sheet under the head current assets or cash and cash equivalents. So this is the way how we need to prepare a single column cash book, two column cash book and three column cash book. Single column cash book, the simplest of all these formats. All you need to do is on the left side, you record the receipts, on the right side, you record the payments. Two column cash book would be either a combination of cash bank or cash discount. Three column cash book, a combination of all these three: discount, cash and bank. So this is the way how we need to prepare a cash book. Hope this is clear. And bye.